The Central Bank of Hungary shocked markets by taking rates into negative territory. Will there be more cuts to follow? Balatoni, András, ING. András, even though analysts forecast the bank to move at some point this year, especially following the ECB's latest action, few flagged now as the right time to move. What do you think caused the MNB to pull the trigger, and where do you think this easing cycle will end?
Previously, they communicated that this is going to, or will not going to take place in March. Later on this year, it is likely that they're going to cut the rates further, but we expected some unconventional tools to loosen the monetary conditions, as signaled by Márton Nagy, who is the deputy governor of the National Bank of Hungary and responsible for monetary policy issues as well. So therefore, it was a quite substantial surprise for the market that this time they used a quite orthodox monetary loosening that is cutting the base rate by 15 bips, and also, which seems to be interesting, that they shifted downward also the interest rate corridor asymmetrically. That means that the overnight deposit rate, which is the lowest part of the interest rate corridor, moved by 15 bips downside. That means that it is already in negative territory and at minus 0.05%. On the other hand, the marginal lending rate, which was previously on 2.1%, decreased by 65 basis points. That is a dramatic drop of this interest rate, and therefore it has decreased to 1.45%, and I think that is the main channel of monetary loosening at the moment.
You mentioned inflation there. The central bank also unveiled its latest macroeconomic forecasts. What was the main takeaway from there?
Actually, they internalized the new data. They decreased quite substantially the CPI forecast for 2016 and for 2017 as well. I think they are optimistic on growth, especially in the light of their new market-based lending program, which is expected to boost the net lending stock of the SME sector and hopefully can contribute to the GDP growth this year. But according to Michael, that is going to rather boost the economic momentum in 2017.
European stocks were considerably lower today as the world digests news of the attack in Brussels. This may give greater impetus to Brexit campaigners and also put more pressure on migrant crisis discussions. With this in mind, do you think Hungary's main challenges this year will be political or economical?
I think that the global risk map is constantly changing. So half a year ago, the main concerns were Chinese slowdown, oil price slump, Chinese monetary policy and US rate hike. But if you look at the news, I think Brexit, the British exit from the European Union, the Grexit, the possibility of Grexit, the migration crisis, the deflation pressure in the Eurozone, the very high unemployment level, that questions already the whole European Union integrity, the institutional framework of the European Union, and that shows that it is a possibility that the Europe project is going to fail. And actually Hungary's export, the bulk of Hungary's export is moving towards the European Union. That means that 75% of our export goes to the Eurozone, and therefore it poses a substantial risk around our base case forecast of the GDP, and therefore I think if that is going to be the major risk, or the risk map is going to shift towards the European institutional framework and the Eurozone, that can have a negative effect on Hungary's growth, and the risk which is associated with the Hungarian economic growth, the Hungarian vulnerability, and also the CE growth and CE vulnerability.
The forint has dropped sharply following the cut, falling 0.7% against the euro to a 2-month low of 3.1301 forint per euro. We've seen currencies going in the opposite direction than planned following central bank decisions lately. Do you think the MNB will be happy with these levels?
Actually, I think that the National Bank of Hungary is really happy with the weakening of the HUF. They can be because the inflation is really weak, therefore the depreciation of the local currency usually means additional inflationary pressure, and therefore that is in line with the below target inflation on the relevant horizon. On the other hand, I think it is also quite important that with the weaker HUF, the National Bank of Hungary can boost the economic momentum. Hungary is a very small open economy. Our export exposure is quite significant, therefore our trade balance can improve when the exchange rate is weakening. And I have a third point as well, which is the profit of the National Bank of Hungary. So therefore, I think weakening of the HUF is in line with the intention of the National Bank of Hungary. On the other hand, the question is, are they able to reach a persistently weaker HUF? Because if you look at the external metrics of the Hungarian economy, the current account shows an enormous surplus at the moment. Our external vulnerability has decreased substantially, and therefore I think that these figures are pointing towards rather a stronger HUF than a weaker HUF. Partly the internalization of this decreasing vulnerability or the decrease of the international vulnerability has been internalized by these interest rate cuts implemented by the National Bank of Hungary.
András, thank you for your time. Well, viewers, that's all from me. Thank you for watching and see you soon. Goodbye.